And welcome back to podcast 2024 for LendingCon. Good afternoon, Leslie. How are we doing today?
Good afternoon. We're great. Thank you for having me.
Great. We are glad you're able to join us today for our podcast and delighted to hear what all Farmers State Bank has. But for our listeners' benefit, can you tell us a little bit about Farmers State Bank and the role you play in the banking and investing world?
Sure. We are a Farmers State Bank located in Southern Illinois. We are a community bank with our branches going her. We do have the nationwide footprint for guaranteed lending. So we have found that the smaller bank kind of offers that convenience and personability that our borrowers are looking for.
Hmm.
Great. And what's happening with the current conventional leaders in the small business lending environment?
Yeah, so what we're seeing right now from our side is most conventional lenders are toughening up and doing more of a cautious approach when underwriting small business loans. In a lot of industries, hospitality, but as well as several other industries too, they are developing stricter underwriting rules where they're focusing more on the strong financials of the borrower, higher credit scores, substantial collateral. Some lenders we're seeing are even prioritizing well established businesses that with proven track records or potentially even the bank's current clients rather than taking on new borrowers. And so that's where we feel like, Farmer State Bank and SBA loans in general can help with those people trying to get their feet in the door or get their business up off the ground.
That's good. So you mentioned SBA loans. That's something that's like a catchphrase in the investment world and lending world. Can you go over kind of what you guys look for within an SBA loan? What are some of the requirements that someone would have to have in place in order to get an SBA loan through Farmer State Bank?
So there are many varieties of an SBA loan. I can speak to what our bank, looks for. We don't do a lot of the startup small business loans, so we're looking at a business that has been in business. Again, speaking to hotels, we're looking for a hotel that has been in business and maybe the sale of that hotel. That being said, we don't turn away construction loans as well, and so we're really just looking on the expertise of that borrower. We've had customers that are purchasing their first hotel and they have been the front desk employee or a general manager of a hotel for 5 to 10 years. And we feel like that expertise, they have obviously helped run those hotels. And so we look at that as being the experience that we're looking for.
So really, it's based on experience, not necessarily the new
It is.
stuff.
Right. Yeah. I mean, there's a financial aspect to it as well. You do have to have that little bit of cash down. My bank generally looks for about 50% that cash equity put in from the borrower. Sometimes you see that drop in cash. Sometimes you see that drop in a seller carrying note. So
Mm,
both of those are, the seller carrying note is allowed with the SCA program. So yeah,
It's
it's a little bit of the financials, but a lot of the expertise goes a long way.
Yeah, because it sounds like it's not just tailored to a strict set of rules.
yeah.
Every situation, it seems, is
Absolutely.
different dynamic, and it
Yeah,
seems you
yeah.
guys
He
adjust
looked
to
at
that.
every situation differently. The people's background, the studies that they have, where they're coming from. You may have again, the reference back to hotels. We may have a hotel that hasn't been performing, and doesn't have that financial strength to back up the credit underwriting. But where we feel like if we have an experienced hotelier and that has that proof of being able to run those hotel staff, we usually try to work that in with our underwriting and potentially get that loan through.
Gotcha. So with that being said, you're talking about a property that's underdeveloped. Um, I know farmers assist with a lot of development kind of things. Do you guys help with like the PIP money as well for the property improvement plans? And if you do, how does an owner go about that? Is it the same way as applying for the SBA, or how does that
Yeah.
work?
So we usually, at the time of application, we always know there's a change of ownership PIP required almost with every change of ownership, unless they've recently done some updates to the hotel. So we ask that that borrower have, quotes on what it is that's wanted from the franchise in order to keep that franchise contract going. And we will take that quote and wrap it up into that financial. And so, for instance, maybe the purchase is 3.5 million, but there is $1 million needed for a PIP. If we collect that information up front, we actually get the appraisal done with those updates being done. And so as complete is what we call it. So we get an as complete appraisal, which means that when those updates are done, this is how much that hotel, would potentially be worth. And that is the dollar amount that we can lend from. And then we wrap that up into the loan, and then we actually do the disbursements here at my bank. So we will follow along. Sometimes we hire a third-party construction monitoring company to go out and do our site visits. Sometimes it's as simple as, just need an updated FF&E. And so we usually handle those disbursements in-house.
That's really interesting. So you get money based on what it will be in the future, not what it's sitting at. So let's say if I've got a property that's worth $3.5 million, $4 million, but after this PIP, we're going to be worth 6 or 7 million. And so you're going to loan based on that 6 or 7 million, not the 3 to 4 million, correct?
That's correct. Our appraisals usually come back now with an as is value and then an as complete value. And so that's why it may requires that we handle those PIP disbursements, because we are saying this is what that borrower is going to do to that hotel, whether it be new FF&E, upgrade the pool, new EFS, new roof, that type of thing. Most of it is not really structural. You're not adding any kind of square footage to that hotel. So once the bank controls those disbursements, we feel like in order to get you to that value of a when complete appraisal.
Okay, so is that then that new appraisal value, is that based on an actual like cash out value of the property, or is it a long-term prospectus based on revenue?
It is a long-term perspective. They're usually saying that 2 years after the final construction, I guess we're going to say, or the PIP time has expired, it usually reaches that full value within 2 years.
And you have teams in place that ensure that the money goes to where it says it's supposed to be. If it's for a pool, you go and check and make sure they're doing something with the pool, or FF&E, like you said. You follow behind them like a regular visit.
Yeah, we have a servicing department that keeps track of all that. Again, when it's something that's maybe a little bit out of our realm, more of, putting in new bathtubs to maybe putting in new Cat 5 cable that's required. We sometimes will hire in a third-party construction monitoring company to go out on site. Sometimes that's, twice during the PIP time. Sometimes it's 3, sometimes it's 4. Other times, if we're just ordering FF&E, we usually can, pay directly to the vendor and then make sure that FF&E is delivered. Those don't require as much construction monitoring for those type of projects, but absolutely, yes.
Oh, that's really cool, because I'm kind of new to the investment. I've been a hotelier for many, many years. So the investing side and loan side is very interesting to me. And I didn't realize that it was based on what the future of the project is going to be worth, not what it's on now. Because like you do a home loan, you do something with your house, it's based on, okay, well, how much equity do you have in your house right now? Not what you're going to put in your house, but what do you have right now? But in the commercial industry, I guess you're looking towards that forward thing. So that's a really, really interesting concept there.
Yeah, exactly. And again, a lot of borrowers think that's a lot of work to have that quote before they're ready for that purchase. But it's such a big part of our picture that we want to get it to that appraiser. Obviously, appraisals are usually done very upfront and early in that lending process. But we want to get that to that appraiser with what is required and potential quotes of what that's going to cost, so that we're sure to get that borrower, every penny of what they're going to invest, and make sure that appraiser appraises that property out as when it's complete.
Great. And with that, we will be right back with Miss Leslee Leverett with Farmers State Bank. This podcast brought to you by IHRMC, the go-to hospitality management company in Orlando, Florida. and the power behind LendingCon 2023. And welcome back. We have Miss Leslie with Farmers State Bank here with us. Before we left to go to the commercial break, we were talking about interest and loans, and I learned something exciting about the possibility of that the loans are based on the future value, not the current value of it, and kind of the process for the SBA loans and all of the interesting concepts of just banking in general.
So, Leslie, what do we see happening with interest rates these loans?
Yeah, so over the last 18 months to 2 years, we have seen a rise. All of our bank's loans are based on prime, Fed prime, Wall Street Journal prime, and so we've seen that going up historically a little bit at a time over the last 2 years. We do feel like as a lender that prime has capped out. Obviously, it's knock on wood and make sure that it's not going to go anywhere, but they are forecasting that we would potentially may see a couple of lowering down of that prime this year, potentially, obviously, before the election, potentially. So, we're hoping that prime starts to go down. However, we also feel like, there's a lot of people looking for a fixed rate loan right now. That's always the talk is I want fixed rate, I want fixed rate. But my question always is, at what cost? We can fix it, but it's going to be at a higher cost. So our bank does do most variable rate structures on our loans. And so we price it at prime plus, a certain percentage. And that's variable. And so as prime starts to decline, your interest rate is also going to start to decline. Do I think we'll ever see the 3.25% that we saw in 2021? Probably not. But do I think it's going to stay at 8.5%? No, absolutely not. So I think that helps you. Some people are worried about the change in the interest rate. We have seen some customers that have seen their payments double over this last 2 years because of that rate change. But again, I feel like we're at that peak and it's going to start going back down. And so I still feel that, variable rate is best for those customers to not get locked in at a higher rate.
Nice. Somebody in the banking industry telling me rates are going down.
This is a good thing.
Happy
Yeah.
about that.
In the personal purchasing of homes, stuff like that, there's an opportunity to do what's called a interest rate buy down. Is that something that's available for commercial lending as well? They can buy down a rate?
So I can't speak obviously for other banks, and I know for Farmers State Bank in particular, we don't offer that. We do offer a different rate structure that we base on a 5-year treasury note right now. That is something that we don't use on our SBA 7A product, but it's a different loan product, a guaranteed loan product that we use as well.
Gotcha. So with that, also there's the USDA loans and stuff there. Can you speak to us a little bit about that and kind of how Farmers works with that?
Yeah, so that was actually the other product that I just mentioned. We do specialize in SBA 7A lending. However, we also use a product through the USDA B&I, and that stands for Business and Industry. A lot of people hear USDA and they think that it has something to do with agriculture. But that's just not fully true. The USDA does offer a program that small businesses can do lending through. The one main difference I would say would be that it has to be in a certain geographical area. And the USDA provides a map. It's an online link that you can go in, and I can help them as well. Plug in that address, and if it qualifies, we can actually use that product instead of the SBA 7A. And so I feel like some of the benefits there are, the 7A program has a cap out of the $5 million per borrower, right? And so the USDA B&I program, they actually cap out per project. So they'll allow us to go to $25 million on a project, and we can amortize that loan over 30 years, where the SBA 7A lets us do that for 25. So the interest rate structure, very same. The fees are very, very similar. I would say the differences are that we can am that out over 30 years, which helps reduce that lender or that borrower's payment, and the geographic location. And so the fact that we can go to 25 million, we've been able to do several ground up construction loans. Of course, you can't build a hotel for 5 million, but you can build one well before 25 million anyway. for limited service anyway. So we've done the ground up using the USDA program and been very successful with it.
Very nice.
So with that also, a lot of hoteliers that get in the industry, they build a hotel, they own the hotel for 5, 6, 8 years, and then they turn around and sell it. Would the new owner have to requalify for the USDA, or would it just be assumable by the new mortgage?
Yeah, that's a good question. They would have to requalify. So the USDA looks at each borrower, not just the project. So we do have to do, a underwriting again for those borrowers. I have actually refinanced a USDA loan from one borrower to another. I've refinanced an SBA 7A from a 7A borrower to a new borrower that chose to do the USDA route. It just worked better for them. They had used all of their SBA 7A eligibility money. And so I'm getting ready to do my third loan for that borrower under the USDA umbrella. All of those have been purchases for hotels, but yeah, I feel like they do have to requalify. Yes, it is a qualification process all the way through again, but my bank tries to make it as simple as possible for the borrowers.
Simple is always a good thing.
Well, that makes sense. Since early in the discussion, we talked about how you tailor your product around the lender, not just the situation. So,
Yeah,
and then,
absolutely. I feel like
and then
it's
also,
very, well, sorry. I feel like
no,
it's
that's fine.
very
Go ahead.
important to find, an expert. We're always speaking, find an expert in that field, whether it be Farmer State Bank is that expert lender, make sure that we're working with a lender that has that knowledge behind whatever program they choose to do.
Right. I guess so. That also probably qualifies when you're talking about hotels specifically, but also if the investor is getting into other projects, I'm sure you will loan to them as well, not just strictly
Absolutely.
hospitality.
Yeah. Yes. So, I feel like that our specialty for Farmer State Bank is hospitality lending. However, we do open up to every category of new businesses, whether that be car washes, gas stations, C-stores, veterinary clinics. We've done a little bit of everything.
But your primary would be hotels, correct?
Yeah, I would say that,
Okay.
I would say the majority of our portfolio is in the hospitality space. That's why I feel like that we have that knowledge to help that borrower along with their hotel purchase or brand up section.
Okay, great. That's a lot of information there given out to us there, and great stuff there.
Well, with LendingCon coming up beginning of August, we're excited to see you there. What
Yeah.
would you say to encourage people to attend, and what can they expect when they meet you there?
Sure. So we're excited to attend LendingCon as well. It'll be our Farmer State Bank's first time at LendingCon, so we're really excited. Meeting new people, meeting new borrowers. I think what they can expect to get out of an interaction with us is, we're going to come prepared, ready with questions to really have you narrow down on what it is they're looking for. We hope to meet borrowers that have a plan in place, potentially already have a sales contract, or they're looking at a property. Hopefully they're going to bring in their financials with them. And, we feel very confident. The thing that we try to be the best at is getting those term sheets out or an LOI out to a customer. We feel like we can do it in 24 hours probably. But if I sit down with a borrower and they have the financials from that hotel, they have their personal financial statement with them, and, a little bit of the idea of what they're looking for, how much they're wanting to lend, is there a PIP required? I feel like we can probably tell somebody, within 30 minutes, hey, I think that we can work on this, or yeah, it's probably not a go for us.
Is that something you feel like you'll be able to do on the spot there with them there, or is it going to have to be like, let's set up a meeting and talk about it later?
Well, so we've talked about the speed meeting, I guess. I don't know what
Yeah,
meeting
speed
it's called,
speed
but
networking. Mhm.
speed networking. I hesitated to use speed dating. Speed networking,
Okay.
Do I think that if that's in there? No. But, I think they can get into feel, I want people to work with somebody that they enjoy having a conversation with and that they respect and trust. And so, hopefully this speed networking, if you know that trust, I develop that relationship and essentially, so that's something in that evening or the next day to go over. But yes, I do feel like that I'll have myself and another lender from Farmer State Bank there with us. Yeah, I
Great.
feel like that we could assess it back in, 30, 45 minutes and be able to really have that borrower, in a good place, like where we move from there.
Wow,
They can always come by your booth too, because you guys will be having a booth there as well, so they can
Yes.
schedule a time to come by and sit down at your booth and talk to us. That'd be really cool. So you can come to LendingCon, enjoy sunny Florida, catch some sun, take a dip in the pool over at the Rosen Center, and walk away with the loan. Exactly. So we're
Right.
going to build a $25 million hotel out of LendingCon. So
That's the like a win-win to me.
awesome. Great. Well, Miss Leslie, thank you so much for your time today, and look forward to seeing you and your team at LendingCon at August 7th and 8th here at the Rosen Center in Orlando, Florida.
Thank you.
Absolutely. Oh, Dan, thank you for having me. I really appreciate it.
All right. Thanks a lot. We'll talk to you soon. Okay.
All right.